Welcome once again to this Banking Academy session on the fundamentals of taking security over a vessel. Briefly, to introduce the team, for those of you who do not already know, Brodie's ship finance team comprises of Neil Richardson, which heads up the team, myself, Hannah Sinclair, Nicola Watson, Ailey Cavart, and Jake Stephen. The team is based in both our Aberdeen and Edinburgh offices, and between us, we have extensive experience in the ship finance sector, acting for both banks and borrowers and in relation to both new build and second-hand vessels in a variety of financing structures. For today's purposes, it will be myself, Nicola and Ailey presenting. So we appreciate that many of you will already be aware of the concepts surrounding the taking of security within your financings. However, and as I'm sure some of you will no doubt have discovered during your time working on ship finance transactions, whether that be on the periphery or in a more involved role, for both of those experienced and relatively inexperienced amongst you, that ship finance world does have its own idiosyncrasies. These idiosyncrasies do create a somewhat niche sector for ship finance to inhabit, and which can often be intimidating to the uninitiated. So for that reason, and following some conversations that we've had with some of you, we thought it beneficial to try and go behind some of the terminology, or for want of a better word, jargon, that can often present as an obstacle to a greater understanding of the risks and challenges to banks in the financing of vessels. In addition, we'll be taking a high-level look at the security packages that are typically required by banks and financial institutions in ship finance transactions. So the agenda for today, during the course of this talk, we'll be looking at the following: the key ship finance terminology, what certain terminology means and the context in which it's used. Key security documents. Here we'll be looking at the documents that banks should be seeking from their borrowers in relation to taking security over and in relation to the vessels that they are financing, and the common terms which banks should ensure are contained in these to protect their interests. And lastly, we'll be looking at the pre-security diligence. Here we will talk to the pre-security diligence required to obtain the key security documents, which should provide an insight into some of the common pitfalls, both commercial and logistical, that banks should be aware of when taking vessel security. And then lastly, as I say, we'll possibly have some time for Q&A. One thing to perhaps state before we begin in earnest is that whilst I refer to the ship finance sphere sometimes being an intimidating space for those unfamiliar, it's also a highly developed one. So that's to say that there are generally accepted practices and market standards when it comes to negotiating documentation, which we would suggest only goes to serve all parties to these transactions well. There are more often than not been decades of thought and negotiation behind some of the most common provisions found in vessel security documents. And so this should hopefully provide you all with some level of comfort when working on your ship finance transactions in the future. So taking the issue of terminology first, it's a ship versus its boat. This may seem a bit of an odd one to start with, but whether the vessel is a ship or a boat will often determine the covenants that you would expect to find in security documents. Instead of spending too much time on what might first appear to be an almost existential question, the way that I remember this is that a boat can fit on a ship cannot fit on a boat. When dealing with a tanker or a container vessel, it is a ship. It will not be a boat. Technically speaking, a ship will be categorized as a ship if it weighs at least 500 tons or above. And it's also helpful to look at the vessel's area of operation. Ships operate in oceanic areas and high seas, with boats generally operating in coastal or inland waters. Flag state, flag of the ship's register, flagged. What does this mean? Well, all ships have to be registered in the ship register of a particular country. Each flag state, so each ship register of a particular country, will impose its own laws on that ship regarding safety requirements, technical standards, environmental protection. Certain flag states are considered more bank friendly than others, And what we mean by that is to say that they're considered more enforcement friendly than others. Time charters. What is a time charter? Well, this is where a company known as a charterer hires a ship for a specified period of time at a rate usually calculated on a daily or a periodic basis. The ship remains in the possession and the control of the owner and the officers, and the crew remain as between the owner and the charterer as servants of the owner under the owner's direction. The owner then provides the vessel ready to trade, and all that is left for the charterer to decide is the direction of the vessel. The owner under time charters provides for the operation of the vessel, including crewing, maintenance, and insurances. Bareboat charters, hell and high water charters, demise charters. These are basically charters where the charter here normally has the use of the built of the ship bareboat. That's to say, without officers or without crew, for a specified charter period, and has the exclusive use and possession of the ship. The charter here is solely responsible for the navigation and the maintenance of the ship, and more often than not, the insurances. Importantly, for any financiers, and contrary to what may be agreed in a time charter, the rental payment under a bareboat charter would typically be on a hell and high water basis, hence the term. These charters are typically seen in finance lease structures or where the ship owning companies may not be industry players. And the aim here is twofold. It's to remove the owner from any liability risk connected to the ownership of the vessel, and to ensure the highest predictability of rental stream for the owner, and in consequence, the bank. IMO number. The IMO ship identification number scheme was introduced basically as a measure to enhance maritime safety and to facilitate the prevention of maritime fraud. Its basic aim is to assign a permanent number to each ship for identification purposes. So that number remains unchanged upon the transfer of the ship to other flags, and it will be inserted in the ship certificates. Lastly, classification society. You'll see this referred to a lot, class societies or class certificates. The objective of ship classification is basically to verify the structural strength and integrity of essential parts of the ship. It's basically to ensure that the ship all is in order to maintain the essential services on board the vessel. In order that that objective is achieved, we have what's known as classification societies, which through their development and application of their own rules, they will verify the ship's compliance with international, national, statutory regulations on behalf of the flag administrations. The vast majority of commercial ships are built to and are surveyed for compliance with those standards laid down by the classification societies. You would not, however, expect smaller fishing vessels to work, fishing vessels or workboats to be necessarily classed. Now I'll hand over to Nicola, who will talk a little bit more in relation to the security.
Thanks, Hannah. So yeah, as Hannah said, we're now going to start speaking about the security. And firstly, I'm going to be giving a brief overview of the documents that we see in marine finance transactions. So each document, what they are and why they're required. And when we think about vessel security, most people will imagine a ship mortgage, but there's much more to it than that. So I'm going to give a brief high-level overview of the full suite of documents. So before any security comes a loan, and the first document that you will typically see will be your loan agreement. And there are many different types of loan agreement associated with marine finance transactions. It could be an agreement for a term loan, it could be an overdraft, or it could be really any other type of financial product. But whatever the type of loan, if there's a specific vessel which is offered or required in security, then the agreement will contain conditions that vessel security be provided. And that's what really makes the transaction a marine finance transaction and the type of transaction that we're speaking about today. So then obviously comes the vessel security package. So that generally consists of a ship mortgage, and a ship mortgage is a statutory form of mortgage over a vessel in the UK. And it's actually the only form of fixed charge or mortgage which is recognised in the UK over a vessel. The ship mortgage is then generally accompanied by a deed of covenant. The deed of covenant secures assets, other assets, which are ancillary to the ship itself. Examples include things like the earnings from the vessel and also requisition compensation, which Ailey is going to speak about in detail later. There may also be a separate assignment or assignation of insurances, depending on the insurance position, and potentially there might be other assignments or assignations of things like refund guarantees or other rights, such as rights under a shipbuilding contract as well. And those items are generally what is known as the marine finance security package, because those are the documents that relate specifically to the secured vessel. If you're either making a loan available or taking a loan from a lender, then they might not be the only documents that you see, because there can be other securities. It's not uncommon for vessel security to be backed by things like floating charges, debentures, guarantees, really any other type of security. There's also the question of where the vessel or its owner operates outside of the UK. There might also be equivalent security under laws in other countries or other jurisdictions. And then finally, in addition to the main package of loan and security documents, you will always see various ancillary documents. Those can include things like corporate approvals and undertakings. So for the purposes of today's seminar, we're going to be concentrating on the main vessel security documents, and those are the ship mortgage, the deed of covenant, and the assignment of insurances. We're going to concentrate on those because they are the documents which are generally required on every occasion in which vessel security is taken. But while there are these documents which we do tend to see in all transactions, different transactions do have particular requirements. So before we go into those main security documents, we thought it would be worth just setting out what some of these other documents do, and in particular, what kind of sets these vessel transactions apart and why you might see some documents in some cases and not in others. So what is required? And I've got the next slide, which sets this out, thank you. So what's required really depends on quite a few different aspects of the transaction. It depends on the type of vessel, it depends on the location of the vessel, it can depend on what type of registration the vessel enjoys, and we really mean by that how it's registered in the UK ship register. And we'll also need to consider whether it's a new vessel, a new build, or whether it's existing, whether it's in the process of being acquired by the borrower or already owned. We'll need to consider the insurances and also who owns the vessel. So I'll just go through some of those points in a little more detail. So firstly, the type of vessel, and really we're looking here at what type of vessel it is and how does it generate income so that we can make sure that's protected in a security scenario. So fishing boats. Fishing boats have particular requirements, principally due to the valuable licenses which are held alongside the vessel. So those licenses and the catch allocated to the vessel often affect the value of the vessel. So it's really necessary for a lender to ensure that security is taken over that license as far as that's possible, and that the license is properly issued and properly attached to the vessel. And in some cases, lenders will require additional undertakings to control what can and cannot be done with the license by the owner of the vessel. Another type of vessel is workboats. So they generally hold a workboat certificate, which is vital to their operation and revenue stream. So that should always be exhibited, although it's not actually relevant really for security purposes, it is for value. Chartering. So Hannah spoke a little bit about the type of charters earlier, and there are particular requirements when taking security over a vessel, which is subject to charter. So as lawyers, we would always look to understand what the charter is and what it does, and in particular, looking at who owns the vessel, who operates it, and who insures it. And we would also want to understand what the charter agreement says on matters such as the period of the charter and liability for any loss during the charter period. And lastly, the type of vessel, the jurisdiction. We're typically looking at UK vessels, but where vessels are trading internationally, there may be other requirements. And this is because there is a general rule in law that the law of the security follows the lex situs, which is basically where the asset is located in legal terms. So still speaking about kind of type of vessels, for new build vessels, there are also particular requirements. And the issue there is that quite often the loans are made available before the ship is constructed. So we have to make sure that we will be in a point to take security at the point that the vessel construction is finished, and also to see what security can be taken in the period before that. So if the loan's been made available before the ship is built, it's really important for us to have a look at the shipbuilding contract. We would also consider things like the location of the yard. Is it in the UK? Arrangements for delivery of the vessel, and for flagging it once it's constructed. And we might also look at refund guarantees that are being made available by the builder's yard to see whether security can be taken over those. In relation to newly acquired vessels, it's a similar issue, because if the vessel is not owned by the borrower at the point that the loan is being made available, then we have to be really careful about making sure that that's fine. So we have to review the seller's title. We'll also have to review transfer documentation. We might need to consider whether the previous owner had a mortgage, and is that being discharged, or has it been discharged, or when will it be discharged? And those are all before all of the other conditions to buying a vessel. So looking at things like inspections, valuations, arrangements for crew, delivery of the vessel, etc. So there's quite a lot more work involved in that. And the last kind of element there, which determines which documents are prepared and how many documents there are the owner. So who is the owner, and is the owner a corporate entity, such as a company or a limited liability partnership? And if it is, there are additional considerations there. The first one is just whether the owner is granting additional security, such as debentures or floating charges, which are available from corporate entities. But also, does the company or LLP have the sufficient constitutional powers to grant the security? So we'll be looking at their constitution, and also things like corporate approval documents, board minutes, directors' certificates. We may also be looking at a wider group if it's more than one company within the ownership structure. And the other kind of slightly more complex owner is a partnership, which are fairly common. If the vessel is to be owned by a partnership, we need to consider what type of partnership it is, where it trades, and particularly if it's in Scotland or England. And we also need to have a look at who the partners are. It's also very common for us to request and review any partnership agreement, just to ensure that the person who is partner is acting in accordance with the partnership's constitution. So that was a bit of an overview of the type of documents you're likely to see in a marine finance transaction and why you see them. And I'm sure you will agree that there are quite a few documents in there. So next, Ailey is going to speak about some of the detail of the main security documents and what they do. But before that, I am putting up on screen a little bit of an overview of the definition of security. So this is from the Oxford English Dictionary, and it basically just says, what is security? It is a valuable item, such as a house or a vessel, that you agree to give somebody if you're unable to pay back the money that you have borrowed from them. And that seems very, very simple, but if only it was that simple. Ailey, are you ready to take us through?
Yeah, thanks very much, Nicola. So the security documents which I'm going to look at today are the ship mortgage, the deed of covenant, and the assignment of insurances. So just starting with the ship mortgage, as Nicola mentioned, a ship mortgage is the only type of fixed charge or mortgage recognised in the UK over a vessel, and is arguably the most important security document for a lender. So the ship mortgage will be governed by the law of the ship's flag state, and therefore its form is determined by the legal system of that state. In the UK, there are two types of statutory form which can be used. Both are short form and come from the MCA website and contain sections allowing for subsequent transfers and also the discharge of the mortgage. So when looking at the forms, they basically contain an acknowledgement of the debt and a promise to pay that debt with interest. There are no additional clauses, such as the usual undertakings that would normally be included in a mortgage or charge document relating to other types of property, and there's also no place to include them. So for this reason, the ship mortgage is usually accompanied by a deed of covenant executed by the same parties as a document collateral to the ship mortgage. And I'll come on to that document shortly. As mentioned, there are two statutory forms of ship mortgage. So one secures an account current, which is an account or arrangement between the lender and borrower, where the balance secured may fluctuate from time to time. And the other secures a fixed principal amount and interest. Now, although it's usual for ship mortgages to be granted to secure a specific loan, a long-standing practice is to use the first form, so securing an account current rather than the principal sum and interest, as it doesn't require the full details of the transaction to be set out, and it just gives a bit more flexibility. The mortgage should be registered at the UK Ship Registry using one of the two aforementioned forms. And if the mortgager is a company, it will also have to be registered at Companies House within 21 days of its execution. The UK Ship Register regulates the priority of registered mortgages by reference to the time of registration. So if it's vitally important that a mortgage is registered with first priority against a vessel, then a notice of mortgage intent form can be completed. So before the mortgage is granted, the lender can complete and file a notice of mortgage intent, even if the ship is not registered in the name of the borrower yet. So in receipt of the notice, the registrar makes a record of the intended mortgage. And if and when the mortgage is presented for registration, the mortgage takes effect as far as priority is concerned from the date of the record of the notice made by the registrar. So the notice of mortgage intent is valid for 30 days, but it can be renewed by the lender from time to time. In the UK, the ship mortgage gives the lender power to take possession of the ship and to sell the ship on the occurrence of an enforcement event. It also grants the lender, as mortgagee, rights against the ship itself rather than just against the owner. So this is useful as it means that even if the ship were to be sold to a third party, which would most likely be in a breach of the owner's covenants, the rights which the lender has as mortgagee over the ship go with the ship and are not absolved by change of ownership. So moving on to pre-security diligence for obtaining a ship mortgage. So when we start to draft the ship mortgage, specific pre-security diligence we look at. So first is, where is the vessel registered and operated? So as discussed, in order for a UK ship mortgage to be taken as security, the ship requires to be registered in the UK Ship Register. So the laws of the flag under which the ship is registered will also, on the face of it, govern the avenues available to the lender in reaching its ultimate recourse of recovering amounts outstanding under the financing as quickly and cost effectively as possible. However, the mortgage document doesn't operate in a vacuum. So to state the obvious, a ship is a movable asset, and whether and how the mortgagee is able to exercise its enforcement powers will depend on the location of the ship at the time the mortgagee elects to take enforcement action. Next, we're looking at, is the vessel's IMO or recognised official number or other identifiers? So as Hannah has already mentioned, when a vessel is registered on the UK Ship Register, it will receive a unique official registration number, which will stay with the vessel for life. So this is not dissimilar to a company number. Even if the vessel leaves the UK flag and returns some years later, it will retain that same official number. So we can use the official number to obtain a transcript of registry from the UK Ship Register to check things such as were there any prior ranking or priority mortgages against the ship, and also these details are important for inclusion in the security documents. Next, who owns the vessel? So the registered owner of the vessel enters into the mortgage with the lender for the purpose of registration. So ships are divided into 64 shares. There's no explanation for this other than the fact that it's been suggested that by utilising 64 shares, the shareholding can always be divided by 2. So a single share or shares in a vessel may be owned by up to 5 people or companies, or a mix of both, as joint owners. The joint owners are considered as one party, although the names of all the joint owners are recorded in the register as owners of that share or shares. Joint owners of a ship or shares in a ship must act together and will jointly be the parties to the mortgage. The shares in the ship can also be held individually. So in this case, there would have to be a separate mortgage form signed for each registered owner that is mortgaging its shares. Are there any prior ranking or priority mortgages which will affect the operation of the ship mortgage? So on review of the transcript of registry from the UK Ship Register, if there are any prior ranking or priority mortgages showing against the vessel, these will require to be discharged prior to the lender taking security. And lastly, any issues shown on the transcript of registry. So taking all of what I've just mentioned into consideration, on review of the transcript of registry, we would want to be sure that the owner's name and address is correct and doesn't require updating. Ideally, this should match what's shown on Companies House if it's a company. We'd also want to make sure that the vessel has full registration rather than simple registration, as security can't be taken over a vessel which just has simple registration, and this would require to be updated as soon as possible. So the slide that's up now is about deed of covenants. So as mentioned, because a ship mortgage doesn't have any space for additional clauses, such as the usual undertakings, it's usually accompanied by a deed of covenant. So that will be executed by the same parties as a document collateral to the ship mortgage. So a deed of covenant has two purposes. Firstly, it contains all of the material, legal and commercial terms and conditions of a security document, which are not able to be contained in the short statutory form of ship mortgage. And secondly, it contains a separate assignation or assignment of earnings, insurances, requisition compensation, and in some cases, fishing licenses in respect of fishing vessels. So on to the next slide. The deed of covenant sets out various contractual terms on the ship owner relating to ownership, operation, maintenance, and insurance of the ship, as well as specifying rights and powers of the lender upon an event of default. So unlike the ship mortgage, there's no specific form that it needs to follow. However, that being said, there are a number of provisions that are generally thought to be key in a deed of covenant. So the first, number one covenant you're looking for is that undertaking to pay all indebtedness under the loan agreement. Next, the mortgage clause, which is just generally seen as a backup to the statutory form of mortgage. So just reiterating that there is a mortgage over the vessel. Next, you're looking at ownership, operation and maintenance covenants. So examples of which are keeping the ship and mortgage registered with its flag of register, keeping the ship within the classification society agreed to by the lender, and also compliance with certain laws. And then lastly, an enforcement clause. So this just sets out when the lender can take enforcement action and what that is. So next slide, we are going to look briefly at the separate assignations or assignments. So firstly, earnings. The ship will generate revenue through a contract of employment, usually. So the lender will want to take an assignment of the earnings, as unless it were to actually take possession of the ship, it has no automatic right to its income. Next, the insurances. So they're usually split into three policies covering the hull and machinery, the protection and indemnity or P&I, and war risks. So as stated earlier, the main recourse that a lender will have to the repayment of the loan in a default will be the ship itself. So if the ship were to become a total loss or a constructive total loss, that recourse will no longer be available, and so the lender will need recourse to the proceeds of the insurances. Thirdly, requisition compensation. So this basically refers to all compensation which may be payable to a borrower as a result of a vessel owned by it being requisitioned for title or in any other way compulsory acquired. So the phrase requisition for title generally refers to very rare occurrence of the flag state which registered the title of the ship requisitioning the vessel in times of war. The ownership of the ship in such cases is effectively taken over by the flag state and equated for all practical purposes for the borrower and the lender that the ship is a total loss. So any compensation paid by the government of the flag state to the borrower is required to then be assigned to the lender. And lastly, fishing licenses. So a fishing license, whilst issued by the state, has a commercial value separate to the value of the vessel. And because of this, the lender will require an assignation of the license holder's rights. So if the fishing vessel didn't have a license, it would only have a limited value, as it effectively is of no commercial use without a license. It should be said here, though, that although we do assign the fishing license in the deed of covenant if appropriate, it is a grey area as to whether or not the fishing license can actually be assigned. So when we send out the notice of assignment perfecting the security to Marine Scotland, who's the Fisheries Administration for Scotland, they will reject that the fishing license can be assigned and will not sign the acknowledgement to the assignment. So in order to provide a bit of extra comfort to lenders, we usually do look to take a fishing license undertaking as well, whereby the borrower undertakes not to surrender or dispose of the fishing license without the lender's consent. And in the event of the lender agreeing to the surrender or disposal of the license, undertaking that the proceeds will be paid to the lender. So moving on, the last thing which I'll touch on that's important in the deed of covenant is the requirement for notices of security to be sent to the appropriate parties to intimate the assignation or assignment of rights to the earnings, insurances, or fishing licenses to the lender. So these are typically sent to contract counterparties or charterers. So this would be if there was a specific contract or charter party in place which was being assigned. Insurers, so as mentioned, it would be the insurers under the policies being assigned. Marine Scotland, or MMO, Marine Management Organisation. So these are the fisheries administrations who deal with fishing licenses and allocation of fixed quota. And this would be when the fishing licenses or the FQA units are being assigned. So as already mentioned, Marine Scotland refused to acknowledge assignments of fishing licenses. However, this doesn't affect the validity of the security. We just need to be able to show that we've intimated the notice, and that's been sent for the security to be perfected. And then lastly, the producers organisation. So again, this is if the fishing licence is being assigned and the vessel is a member of a producers organisation or PO, as the PO deals with all the quota allocation in terms of the fishing licence for the vessel. So moving on to pre-security diligence for obtaining a deed of covenant. So firstly, whether the vessel is used by the owner or chartered to another person. So if there's a long-term charter of a ship, the lender is likely to require the owner of the ship to assign to it any rights the owner may have under that charter document. So this charter assignment will usually include directions as to how the ship's earnings under the charter are to be applied. And a charterer may also have an interest in the insurances of a ship. So in that case, the lender may require the charterer to either assign or subordinate its interest in the insurances to the interest of the lender. So these are all things which would require to be considered in terms of the drafting of the deed of covenant. Next, what insurances are in place and what the terms of the insurances are. So we'd be looking to assign all insurances taken out in relation to the vessel. So as I said, this is usually hull and machinery, P&I, and war risks insurances. The governing law of the deed of covenant will follow that, the law that governs the assets over which the security is to be taken. So as London is still the main centre for the insurance market, English law will typically govern the insurances. However, we have come across Scots law governed insurances, which is why it's important for us to look at the full insurance policy to confirm what that governing law is. So the deed of covenant has a requirement for notice of the assignment of the insurances to be sent to the insurers. And so we also require the insurance details to make sure that the notices are going to be sent to the correct parties. Are there any contracts for earnings which should be specifically charged? So as mentioned, in regards to charter parties, we need to make sure that any earnings to be assigned are included within the deed of covenant and appropriate notice is sent to the correct parties. In respect of fishing vessels, is the vessel a member of a producers organisation? So this is important as, again, we would be looking to send notice to the PO and the correct fisheries administration, most likely Marine Scotland, if the security has been taken over the fishing licence or FQA units. What certifications does the vessel enjoy? So in order to make sure all the correct undertakings are included and that the deed of covenant is fit for purpose, we need to make sure that the vessel has the correct certifications and that these are also maintained. And lastly, is the vessel a member of a classification society? So generally with smaller fishing vessels, they're not classed. However, this is the question which we need to ask in order to tailor the deed of covenant appropriately. So moving on to assignment of insurances, this is the last document that I'll look at. The deed of covenant does cover the assignment of insurances. However, a separate assignment can be included in the security pack. In simple ship financing transactions, the owner or borrower will often be a single vessel owning company, so will therefore typically have no other material assets other than the vessel, which makes it the lender's main form of security. So insurance is vitally important in order to ensure that this key asset is properly insured against risks that may affect its value and or its operation. So the key risks which we look to see that the owner of the vessel is insured against are firstly total loss. So This is if the vessel is completely destroyed or it's so damaged that it's uneconomical to repair the vessel. The vessel will then in effect be worthless unless adequate insurances are in place against this risk to cover the sums due to the lender. Next, the damage or partial loss. So if the vessel becomes damaged, the value of the vessel will be reduced until it's repaired. So the lender would want adequate insurance in place against this risk so that funds can be provided to pay for the repairs as soon as possible. Third-party liability. So if the vessel is involved in an accident whilst under operation by someone other than the owner or whilst on charter, there's the potential that a claim could be made and enforceable against the vessel, which could lead to the vessel being arrested and sold by a court order. So the lender would want adequate insurance in place to cover this situation. And then lastly, interruption of earnings. So this would be in the circumstance where the vessel has been damaged in the time it takes for it to be assessed and repaired. And during this period, there'd not be any income being generated by the vessel. And so the lender would want adequate insurance to cover against this as well. Moving on, so as already mentioned, there are 3 types of insurances which we look for when drafting the deed of covenant or the assignment of insurances. Firstly, the hull and machinery. So this is insurance against the destruction or total loss of the vessel or the cost of repairing damage to the vessel caused by perils of the sea. Protection and indemnity, which is against third-party liabilities or claims arising from accidents involving the vessel and pollution incidents. And lastly, war risks, which is a form of hull and machinery insurance, but where the total loss or damage is caused by war risks. So as with the deed of covenant, in order to perfect the assignment of insurances, it must be intimated to the insurers of the policies. So there's no need for the lender to obtain an acknowledgement to the notice to ensure that the assignment's legal validity. However, a lender will often request that an acknowledgement is provided to confirm that the assignment of insurances in favour of the lender has been noted on the policy and that proceeds of the insurance will be paid to the lender in the circumstances set out in the assignment. So these confirmations are usually provided by insurance brokers or insurers in a letter of undertaking addressed to the lender, and also by inclusion of a loss payee clause on the policy. The letter of undertaking is intended to create a contract between the lender and the broker or insurer and gives the lender comfort that the notice of assignment in its favour and the terms in which the insurance recoveries are to be applied has been given to the principal underwriters insuring against the various risks. Now, moving on to last slide for this, it's pre-security diligence for obtaining the assignment of insurances. So firstly, types of insurance. So that's the 3 hull and machinery, P&I and war risks. So as discussed, we want to make sure that all the appropriate insurances are in place over the vessel, as it is the lender's key asset for security. Next, the governing law. Again, we'll need to review the full policy documents to confirm its governing law, and in turn, the governing law of the assignment of insurances. Insured person. We'll want to make sure that the owner is the insured so that they are able to assign all of their rights to the insurances to the lender. And lastly, noting of the lender's interests. So we'll want to see that the lender's interests are noted on each insurance policy, and so we'll be looking for an acknowledgement of the notice of assignment via letter of undertaking. So I'm just going to pass back to Nicola now.
Thanks, Ailey. So yeah, that's now we've had a bit of an overview in terms of the main documents and what they do, and hopefully you'll agree that there's quite a lot involved there. So really, if you're either a borrower looking to obtain a loan from a lender over a vessel, or if you act for a lender and you're thinking about offering a loan on the basis of security over a vessel, is really worth being aware of some of those points, and it's worth discussing a few of them up front, really, just to make sure that your security doesn't fall into some of the common pitfalls. And most of those are the things that we've spoken about already today. So the first one really is your insurance. Ailey's obviously just spoken a lot about insurance, so really it's worth getting copies of the insurance as soon as possible to check that the vessel is adequately insured. Just things like it's insured in the right name, that there are those 3 insurance policies: hull and machinery, protection and indemnity, and war risks. Secondly, the transcript of registry, and can a clean transcript of registry be provided? So what I mean by clean is the vessel already owned by the borrower? Is it already registered in the UK SR? And is it currently owned free of mortgage? So basically looking to see whether there are any of the issues to do with the acquisition of vessels or new build vessels that we would need to consider. Thirdly, the other issue there is actually if the vessel is in the UK, there are obviously issues if the vessel has to move into the UK from another jurisdiction before security is given. So if that's the case, it's worth just finding that out as early as possible. The next thing to think about is what type of vessel is it? Are there any of these additional certificates or licenses required to operate the vessel, and are there copies of them readily available? Does the vessel enjoy membership of a classification society or a producers organization, and does it have a fishing license? All of those things are really important to the security, so it's worth getting all of that information up front. And lastly, just how does the vessel make its money? Are there any kind of special earnings or charter contracts that will need to be considered in terms of taking security over that vessel? And that is pretty much everything we were hoping to speak to you about today. So I'll pass over to Hannah for our conclusion.
Thanks, Nicola. Hopefully we've been able to give a digestible synopsis of the issues that banks should be aware of in taking security over vessels, and that you found this helpful. I should mention as well that we will be publishing a glossary of useful terms that are used in ship finance transactions on our website shortly after this presentation, which we hope would be a useful tool for you all. Before we sign off, in terms of questions, we have received one asking us to speak a little more on refund guarantees and when these are used. In answer to that, then we can say that, as alluded to by Ailey and Nicola previously, with a new build, the base documentation will be the shipbuilding contract between the borrower and the builder, and the refund guarantees provided by the builder's bank. Under the refund guarantees, the builder's bank will undertake that in the event that the purchaser, your borrower, ends the contract due to a default, which is basically normally like a builder's insolvency, and the builder fails to refund any of the advances provided previously provided by the borrower, then the builder's bank will then agree to refund those installments on the builder's behalf. So if you have a refund guarantee, you'll often have a refund guarantee for each installment under the shipbuilding contract. In a new build financing, the lender may fund some of the installments payable under the shipbuilding contract, which is what we call pre-delivery financing, or often just delivery installments, which is less risky. But in terms of the pre-delivery financing, because it's more risky, and it's essentially because you don't have a vessel at the end to take security over at that stage, you'll often seek to have the assignment of the refund guarantees, which Ailey spoke about earlier, under an assignment of refund guarantees as security. So once again, I'd like to thank you all for attending. Please do feel free to contact either myself, Nicola, or Ailey with any follow-up questions that you may have. And I hope that you have a good rest of your day. Many thanks.